Welcome to my February 2023 dividend portfolio recap. For anybody that's new to the channel, my name is Troy. I'm 28 years old and I live in Oklahoma City, Oklahoma, and my goal is to retire early at 50 years old. Over the past 3 years, I've been learning all about dividends and growing these accounts, and today we're going to check on that progress. But we have a lot to cover, so let's get right to it. So this is a screenshot from my taxable retire early account with Fidelity as of this morning. You can see my 11 holdings here on the left side, and then down here at the bottom, you can see my total portfolio balance of $27,186.76, which is up $141.56 from last month. Next, I want to take a look at my best performing stocks of this group with this screenshot. You guys can see my top 3 performers here. We have ExxonMobil that's up 54.17%, AbbVie that's up 23.52%, and then here is Nvidia that as of 4 or 5 months ago was my biggest loser and is now up 21.92%. Again, I want to show that I'm not some stock picking genius, and I also have some losers, which you can see here. My biggest current loser in this account is Next Era Energy that's down 9.12%. Then we have Microsoft that's down 8.86%. And we round it out with Pool Corp that's currently down 5.57%. I do want to draw some attention down here at the bottom where you can see that I'm up 8.36% overall on this account, which is 0.29% higher than January and comes out to $2,096.81 in gains. Next, let's check to see how this account stacks up versus the 3 major indexes year to date. You will notice that there are 2 different rates of return. You have your time-weighted return and the money-weighted return. The time-weighted return is a return best used for accounts that have money go in one time and are left alone, while the money-weighted return is a metric best used to determine the performance of accounts that have money going in and out throughout the year. Since the latter fits my investing style, we will use the money-weighted return, and you can see my retire early account is sitting at a plus 5.64% year to date, which is actually down 1.42% from my January performance, but still outperforms the S&P 500 and the Dow Jones, but is underperforming the tech-heavy NASDAQ that is doing really well to this point in 2023. Next up, I wanted to show you how I keep my portfolio balanced all year long with this simple diversification table that I made. So I think this table is really sweet and really helps me keep on track throughout the year. Over here on the far left side are all 11 of my holdings. The next column is the goal allocations I want each of those holdings to be at in my portfolio. The next column tells me that based on all the money I have in the account, what the value of each of these stocks would be if they were at those goal allocations. The next column tells me how far I'm off that number, while the last column is the one I use for my daily dollar cost averaging. I take the money that's in the account, I divide by the number of trading days in that month, since I add money monthly, and then whatever the number is in this column is what I add each day to each holding. This dollar cost average approach really helps me take the emotions out of my investments and just keeps me adding to my positions. It is important to note that I do not sell if I'm overweight, but instead I just keep adding more money to my underweight positions until I'm balanced again. Okay, now I want to take a look at this retire early account on my spreadsheet by the numbers. The main reason I'm showing this to you is to show you the growth numbers since last year on this one. Down here, you can see that I'm up to 168.592 total shares, which is up from my 167.947 shares at the end of 2022. And I'm now at 15.326 average shares, and that's compared to my 15.267 average shares at the end of 2022. Any money added to this point in 2023 in this account has not been added by me. It has all been dividends and one other source that we'll cover here in a few minutes. Next, let's look at the current yield of my account, which is 1.8% if I were to begin this same account today. But since I didn't begin this account today, my yield on cost is actually 2.05%, up from 2.01% at the end of 2022, due to the capital appreciation and dividends being received over time. Last thing on this screenshot is over here on the right, where you can see I'm now projected to make $504.79 a year, up from $494.51 in December. $42.07 a month, which is up from $41.21 in a month in December, and $1.38 a day, which is up from $1.35 a day in December. Keep in mind that the real fun for this account doesn't start until my Roth IRA is maxed, so be sure to follow along on the channel as we track to see the progress on this one throughout the year. Next, I want to show you where that little bit of money I did add to this account came from and what I did with it. So I have the Fidelity rewards card, and they offer 2% cash back like most credit cards these days. The cool thing with this one is that the 2% is automatically redeemed at the end of the month for me and added to my cash balance for me to invest. In the month of January, I spent enough to earn $26.13 in credit card rewards, and I had $4.22 in cash in the account, which gave me the $30.35 you see here to invest. I went by the allocation chart I explained to you guys a little bit earlier in the video, and I bought all the little pieces you can see here. It's not much, but I'd rather put that money to work rather than leaving it sit in a different credit card or just as cash in my account. Now we can get to one of the parts of the video you're actually here for: who paid me and how much they paid me in dividends. In the month of February, I received 6 different dividend payments. The first one was on February 13th, where I received $11.09 from APD, which was dripped, getting me another 0.038 free shares. Then 2 days later, on February 15th, I received $29.33 from AbbVie, which was dripped, getting me another 0.192 free shares. Then the next day, on February 16th, Apple sent me $4.13, which was also dripped, getting me another 0.027 free shares. Then on February 23rd, I actually got 12 cents from Levi, which was a free stock I have from Webull that I forgot I had, which was not dripped. So I actually sold out of that position, and I'll bring that cash over to my Fidelity account when I'm able to. And then we get back to my on purpose dividends on February 24th, where I received $13.89 from Starbucks, which was dripped, getting me 0.132 free shares. And then lastly, on February 28th, I received 2 cents in interest on the tiny bit of cash I held in the account. Now let's move over to this next screenshot to see how much that totals and check for that year-over-year growth. Looking here, you can see that back in February of 2021, I brought in an impressive $5.98. Then that bumped up to $28.33 in February of 2022, which was a 373.7% year-over-year increase. And that brings us to this year, where I made an exciting $58.58, which is another 106.8% increase from 2022. Doing a little sneak peek here at the end of Q1, you can see that with most of my dividends still pending for March, we are already up 31.3% from Q1 of 2022. So make sure you check back at the beginning of April to see how much we crushed Q1 of last year. The last thing for this retire early account that I wanted to leave you with is this chart. This is just a simple chart to show all the dividend income that I've received to this point in my taxable accounts, which is $615.67, which also has nearly earned me 4 free shares over that course of time. Now let's move over here to the account I've actually been investing in since 2023 began, the Roth IRA. So this is a Fidelity screenshot of my Roth IRA, also as of this morning. You can see my holdings over here on the left side, and then down here at the bottom, you can see my total portfolio balance of $46,343.90, which is actually down $272.57 from last month. Next, let's take a look at my best performing holdings of this group with this screenshot. You will see here that only one of my best performing holdings in this account is even positive. That holding is Tesla, which, like Nvidia from my retire early account, used to be my biggest dog in this account and is now leading the pack up 7.71%. Then I have SCHD that's currently down 0.93%, and then VOO, my largest holding in the account, which is down 2.01%. Again, let's take a look at the biggest losers of this account here. My biggest current loser in this account is SPYG, that is down 10.95%. Then we have my QQQ holdings of QQQJ, which is down 9.82%, and QQQM, that is down 9.27%. We also need to look down here at the bottom, where you can see that I'm now down 4.12% in this account since it began, which is actually 0.72% more than I was down last month, resulting in a loss of $1,216.94 on invested money in this account. The silver lining here is that I still have over $17,000 to invest for my rollover 401k and the $6,500 for my 2023 contributions to dollar cost average down on my positions. Next, let's check the year-to-date performance of this account versus the 3 major indexes. Again, we have those time-weighted and money-weighted returns, and since I have not added any funds to this account yet, they are the same. Despite February not being kind to this account, being down 0.71% and all, I'm still sitting at a 2.31% year-to-date gain on this account, which is only outperforming the Dow Jones at this time and underperforming the S&P and NASDAQ to this point in 2023. Next up, we'll take a quick peek at my goal allocations with that same diversification table I showed earlier. So again, from left to right, we have all the holdings on the far left, what I want them to be in the next column, the value they should be at if balanced correctly after that, the amount of money needed to make that happen, and then my dollar cost average daily approach to get all the money spent by a certain date in the last column. I have a goal to not only get all of my Roth funded by the second Tuesday in June, but I also want to have all that money invested by then as well. The reason for that date is quite simply that it is before the ex-dividend date of all of these holdings, which would allow me to get the full dividend for June, September, and December. Remember, the number you see on the screenshot now are only based on the rollover money and not any of the 2023 Roth contribution amounts, because I'm behind on that a little bit because of little man back here, but hope to be getting something rolling by the end of March. Now I want to take a look at this Roth IRA by the numbers on my spreadsheet. Again, this is the one I've been spending money on so far this year, so we have a lot of progress to check up on here. Down here at the bottom, you can see that I'm up to 313.36 total shares, which is up from 149.6 shares at the end of 2022. And I'm now at 44.765 average shares, and that is compared to the 21.370 average shares at the end of 2022. Here you'll see that the current yield of this account is sitting at 1.85% if I were to start the same account today, which is actually higher than my yield on cost of 1.77% because a lot of my positions are in the red. And here is another big change from last month and last year over here on the right. You can see that I'm now projected to make $433 a year, up from $135.64 in December, $36.10 a month, up from $11.30 a month in December, and $1.19 a day, up from 37 cents a day in December. Keep in mind that I still have about $24,500 to add in between now and the middle of June to all of these holdings, so I'm excited to see where this one ends up by the end of the year. Again, be sure to stay tuned to the channel to follow along for those updates. Next, let's take a quick look at all the money spent in this account and what it got me. As mentioned a few times now, this is the account where Serious Coin was spent this month. You'll be able to see the holdings I added to, which is all of them, how many shares I bought of each one, and how much I spent to get those shares, a lot, and the average cost of those shares. In total, I bought 76.516 shares for a total of $8,426.55 in the month of February. Next, let's take a look to see what I made in this Roth account this past month. So as I said earlier, all of the holdings in this account actually pay out in March, June, September, and December, so I'm not typically expecting anything in this account for those off months. However, I do have a ton of cash sitting in SPAXX, which is currently paying north of 4% interest, which on February 28th paid me out a nice $73.52 that was just added back to that same balance. Let's take that down over here to this next screenshot to see how that stacks up versus previous times. So you'll be able to see here that I did not start my Roth IRA until 2021, but as mentioned, I do not get paid from these holdings in these off months, and I never really had cash just sitting around. But with that being said, this has gotten me off to a really nice start so far in 2023, bringing it over $100 in January and that $73.52 this past month, which looking here already has me at a 735.1% year-over-year increase from Q1 of 2022, and I still haven't gotten my March dividend payments. Down here at the bottom, I am also already past my 2022 total Roth dividend income in these first 2 months. Needless to say, I'm very excited to see how much I can bring into this account by the end of the year. Lastly, I wanted to show you this chart to see those Roth numbers added up. So far, I'm up to $337.84 in dividends in my Roth IRA, which has resulted in 1.557 free shares. And as I just mentioned, this account is taking off in 2023, so this number should be shooting up pretty quick from this point forward. Here I typically bring up some kind of quick update on my HSA and 401k, but the only news I have is that I finally started with my new employer's plan, but this one is a simple IRA and does not include fractional shares, and I'm not sure if they offer an HSA, so I might just be adding 3% to my employer match and leaving these two accounts off the video unless there are dividend receives to cover. But now let's get to the combined and overall comparison to round out this video. Here you can see that I'm up to 689.385 total shares, which is up from 619.422 total shares in January and 518.474 total shares at the end of 2022. I'm now up to 31.336 average shares, which is up from 28.156 average shares in January and 23.567 average shares at the end 2022. Moving over one column, I'm now also up to 73.754% of my money being dividend paying stocks, which is up from 65.349% in January and just 53.890% to end 2022, while also being up to 3.358% of my cash being invested in non-dividend paying stocks, Tesla, which is up from 1.117% in January and just 0.767% to end 2022. The last thing I wanted to point out on this screenshot is the projected dividend income. We're now at $1,069.78 in a year, $89.15 in a month, or $2.93 per day, and that's compared to the 2022 projections of $931.66 for the year, $77.64 per month, and $2.55 per day, which both crushed the projections of December of just $745.30 per year, $62.11 per month, and $2.04 per day. The last screenshot of my spreadsheet I wanted to show is totaling up all the dividends received from all accounts and check for that growth. Looking again back to February of 2021, where we made that $5.98, to February of 2022, when we had that 373.7% increase to $28.33%, and now we can see that arguably more impressive 366.3% increase from 2022 to $132.10 for February of 2023. Not including all of the money that will be invested into these accounts, dividend increases, and future dividends received this month to close out quarter one, we are already up 226.6% from quarter one of 2022. You have to love that dividend snowball. Okay, after all of that good news, I still have one important thing to add. On February 27th, I received a 10% dividend increase from NextEra Energy from $1.70 per share per year to $1.87 per share per year that will impact my dividend being paid on March 15th. You just can't make this stuff up. And that's going to wrap it up for this February dividend recap. Be sure to leave a like on the video if you guys enjoyed today's content. Make sure you guys are subscribed and ringing the bell to stay up with that content that I release 2 times a week. And use the comment section down below to let me know what you made in February for your dividend income. But until next time, see ya.